All right, folks. Today, the market reacted, in a, I would say, positive way to the Federal Reserve speech, which was, from Jerome Powell. And yesterday we had Monday we had the vice president. Yesterday we had another governor. And today we had, the chairman, Jerome Powell. And they all said we will need to do whatever it takes. So the message hasn't changed at all. The message is still from the U.S. Central Bank. We need to do whatever it takes to bring inflation down. Now, what it may cause is they will have to break something. Either the real estate market, either the job market, either the stock market, which is already broken since the beginning of this year. But if they continue this way, something has to give in order for them to achieve their target. And their target is what? It's 2%. So in this video, I'm going to share with you why, when you look at real-time data, which might not be the case when the Federal Reserve is, being this aggressive, they might be going into a wall that can either bring the global and the national economy into total chaos, and how you might prevent from not getting dragged into a lot more poverty if you're already fighting to make ends meet. All right. So if you look at the market today, the market did, quite well given the latest speech. S&P 0.6%, Dow 0.6%, Nasdaq 0.6%, and Russell 0.8%. So there is still a lot of volatility, meaning we still have these, huge swings. At some point, the market is up 200 points, then it's down another 200 points in the same session and in a matter of few hours or maybe minutes. Why? Because people don't still know what to do with where to put the money to work, or just to sit and wait. Now, the thing is, some of the reason, or the main reason why I think the Federal Reserve might be doing a huge mistake, is what Cathie would just, share today in an article that I'm reading here on Yahoo Finance. She argues that the Fed has gone too far in its bid to fight inflation via interest rate hikes. And it's true. Interest rate hikes is not the only thing or the main thing that they can use to bring inflation down. It's just a tool, as I mentioned, but it's not the main way. It's not the cure. It's not the cure. The economy is a free market. And in free markets, everything needs to balance itself out. That is the definition of capitalism. Let me show you. If you keep buying stuff that are expensive, all right, and that are non-essentials, will you keep buying those? No, of course. You will, start to go to maybe the Dollar Tree stores, or you will find alternatives that may help you maintain somehow a decent lifestyle, or the lifestyle you were used to, either by stop buying stuff or by switching your habits, and we've already seen these coming as we're looking at earnings results from companies like Target, Walmart, Kroger, the clothing stores, etc., etc. Second thing, she argues that the Fed is overly focused on lagging indicators that show inflation, while leading indicators are showing signs of deflation. And she's not the only one saying this. Bunch of researchers, economists, strategists are saying the exact same thing. Because if they continue to be as aggressive, as I mentioned earlier, they will bring what we call depression. And a depression is a worst thing you want to have for the economy. Inflation means increasing in price, all right? Deflation, those prices are now coming back down. But if you go into depression, it means that the economy is depressing. Like a human is depressing, the economy is depressing. It's a bad thing because it means huge amounts of layoffs, people losing their jobs, which ultimately lead to people not having savings, not having money. Then they can, drown in huge debts. And then those debts will then turn into collections. It's a vicious cycle you don't want the economy, not only for the US but for the world, to be in, just because you are not looking at the reality. Remember, when you get to the CPI data, which is the consumer price index, all right, you get to the PMI, which is, or the PPI. The PPI is the CPI for the companies, the producers. When you look at all of these economic indicators, they are always 1 month behind. They are 1 month behind. But if we look at the real data, let me just take the main things that are playing a huge role into inflation. We do have what? We do have real estate, so house prices, we do have gas prices, we do have food, we do have clothing, we do have, transportation. All of these things are dropping and have dropped significantly since the beginning of the year, but most when you compare month over month. So the next CPI data that we're going to receive for the month of August is going to continue to show inflation has gone down, but even more so as we are starting the month of September. All right. So that being said, the Fed also mentioned that they were going to look at how the economy is doing. If they continue to look at these indicators that are behind and lagging 1 month, then they're also going to be 1 month away from the reality, hence causing this shock. But I believe they are smart, and because of that, they're going to look at the real-time data. And by looking at the real-time data, they may shift the message, they may shift the tone, and instead of being like aggressive, they might be a little bit moderate. So instead of maybe increasing interest rates to 0.75% or 75 basis points, they may start doing, 0.5 or maybe say 0.25 all the way up till the end of the year. All right. So when they do so, when they realize this, I guess they're going to realize at some point, then the market is going to be a lot more comfortable into putting money back to work. That means stocks are going to go back up again, but you want to make sure you are already invested in the quality stocks. When this happens, then you can benefit, and that's how you're adding, money to your net worth. All right. So if you are somebody that's willing to invest on the long term, it doesn't change much for you because you are already investing on a regular basis like me, 2 weeks, 1 week, or on a monthly basis. Now, if you're somebody that's willing to swing trade, remember, energy is where I see some of the main trades to be done. But if we have an everything rally, it won't matter much because everything's just going to go up. But you want to make sure you are holding quality stocks. Now, from a personal finance perspective, I think if the Fed doesn't realize they may be doing a mistake, it means the economy might break. If the economy breaks, for now, we still have a lot of jobs available out there, whether online or in person. So what I'm doing, or my suggestion for somebody struggling or maybe willing to prevent himself, his household finances from completely going out of control, is to start seeing how you can have significant increases in your income. I don't care if you deliver pizza. I don't care if you have to go work in a restaurant. I don't care if you have to go work for UPS or part-time elsewhere, or even do something online, which is even better because you are sitting on the comfort of your own home and working behind a computer, and you can easily make $4,000, $5,000 a month. All right, that is a significant chunk of money for people to start not even touch that money, or just use those to pay off debt a little bit more than they do on a monthly basis, just because if the economy goes bad and goes south, then poof, those collections, you don't want to have them because it means bad credit. It also means that you can repossess some of your belongings and your assets. You don't want to be in that position. So what I'm doing is I'm trying to save as much, but also I'm trying to gain, to increase my incomes by picking everything I can pick right now in order to make sure I can, navigate, go through this downtrend in case it happens, because we're not going to go over a recession. It's going to be a depression. And trust me, we don't want that to happen. So let me know if you have some thoughts around, side hustles, maybe, other jobs you can do about part-time, maybe online, remote or not. And, the community will look at that, and it might help some of the people, watching this video to actually take, those actions, because as I mentioned, we don't want to be in a situation where in case this thing goes south, we are all caught up. No.